Hey friends, it's Simon with Trade and Perform Coaching. Want to do a trade review of the price action from Friday and kind of go over what we thought would happen, what the plan was, and how we did or did not execute on the trade. And so a couple of important things happened on Friday, and while it looks straightforward from the zone perspective, it wasn't that straightforward. Okay, so first, before we get started, let's kind of go into get the legal part out of the way so we can get into the good learning stuff, right? So legal notices, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you cannot afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. So, keynote, I'm a trader, I'm not a magician. I make and lose money, right? Not all trades are winners, okay? First thing you have to know, anyone who promises you 100% win rates, right? Run, they're lying, not possible. So the first thing that we had when we came into the day in the market preview, which was posted publicly, by the way, or the trade review the night before, options expiration. OpX can cause weird, violent moves. I want to highlight that. See this here in the middle of the day where we get these giant move down, this sudden flush to the downside, and then this sudden flush to the upside? That is options expiration. Why is that different than any other day, right? Some people go, well, geez, Simon, that's not anything special, is it? And I would beg to differ. It's what I live to avoid if I possibly can. If I can get another chart up here, it'd be really cool. Let's see if we can do that. Here we go. Okay, so when I look at the 5-minute bars, wow, it's not what I want. There we go. And I get 5-minute bars. And I stretch the week out, right? Notice how big those two bars are. Now scan through the week. And first of all, notice the behavior, right? Slam down, slam up, okay? Notice through the week, as you scan through that, see how that behavior, so we get bars that slam down, right? But there's no slam up. Slam down, there's no slam, there's a grind up, right? But there's no grind down, right? There's big bars that push higher, but they don't turn around immediately and reverse lower, right? The only place we came even remotely close was when we were getting into panic territory right at the end of the day, which is where you would normally expect this kind of behavior where there's wide, large volatility, either in the first 30 minutes or in the last 30 minutes of a panic up, panic down kind of day, right? So when you get this, normally people would expect kind of this slow grind through, this is just after New York lunch, you'd expect that slow grind and you get this slam instead, right? And what happens is this really messes with people's emotions, right? People are like, oh, people were looking for a double bottom or a higher low right in here to begin with, and they get slammed to the downside, right? Then people immediately think, well, continuation lower, right? Let me take the first bars back up for a roll to the downside. And there was reason to believe that, right? Look, we're going through a series of lower highs and lower lows. Just going to slow the pace down, right? Right until it's always easy when you look, but when you look at the chart just like that, for me, right, and from when I talk to most traders that I coach one-on-one, most people look at that chart, they see this down angle, right? They see this angle of downness, I'll call it, right? Where we can't get above new lows, new highs, right? What, Matt? So everyone, when they look at the chart afterwards, they go, well, of course I would have gone long there, right? Remember, we're not looking at the zones. I'm kind of thinking, wow, they're really accelerating to the downside. So what I want at the low is two things when I'm looking. I want to stretch. So usually I'm looking for a 10-point stretch, sometimes a 20, but at least some derivative of 10, whether it's from prior day's swing high, but preferably intraday. So we started off right about here, and this is about 23.53, and that brings me over to 23.43. So this push down is right into my wheelhouse. I want to get long, right? But I have a couple rules that save me from losing a lot of money. Sometimes traders don't like these rules because it keeps them from trading. But remember, my objective, there's two differences. You can be a hobbyist trader. A hobbyist trader has a lower level of scrutiny because it's a hobby, right? Hobbies are okay to lose money in. If you play professional hockey, you expect to make money. If you play amateur hockey, you expect to spend money. You have to join leagues, buy pads, all that good stuff. If you are a professional pilot, you get paid to fly a plane. If you are an amateur pilot, you pay to fly the plane, right? You have to rent it, gas it up, the whole 9 yards. If you're a professional trader, all you're getting paid for is to find the highest odds trades. If you are a amateur trader or you're a non-professional trader, you are just looking to participate, have fun, maybe make some money, maybe not, right? More like a casino than a true edge. So now we're going to roll over, right? And look how this, so one of the things I have, friends, and I think this is really important, angles of attack, right? Now, this angle of attack, I'm going to scoot this over a little bit. I was fine with this angle of attack. If we followed this angle of attack, because ES tends to bounce in, right? And we had followed this and we had come into this level at this angle of attack right here, okay? Totally fine with it. But we changed our angle of attack, right? This is a airplane, how pilots figure out whether they can pull out of a dive or not. And we went from this angle to almost a vertical 90-degree drop, right? Way past my tolerance for, I want less than 60 degrees of attack, right? Now, I'm still willing to take this trade, and I have two ways to take it. One I'm going to discuss, one I reserve for the room. So, and I got neither, and neither setup worked for me, right? So this was already highlighted on the charts as a key area, right? And we can see that because when we, and let's remove the ovals and the rectangles and ellipses. There we go. So when you look at this angle of attack, right, I already wrote white zone, buyers are in control, buyers are in control above, I should have put sellers below, okay? And I put, in this area, this is a 50 retrace, but poorly auctioned, lower odds, it's still support, right? So what I'm trying to do is find the highest odds. In this zone, right, what I was looking for was tick divergence into this location. So that was important. That's part of my trade setup. I need tick divergence when I mark an area as poorly auctioned. I have to have tick divergence, right? Otherwise, it's not a trade for me. Even if I did all the other work that said we should bounce there, right? I need all the other work. Why? Because I'm worried about that it might re-auction the entire poorly auctioned area down to the white zone, which is exactly what happened. So when we pushed into this area, I needed tick divergence. Why? The angle of attack was almost vertically straight down, right? This was a flush. And what am I trying to avoid here, right? So this is important, folks, because all people do when you trade is they look and go, well, of course you would have bought there because look, it bounced 10 points or 8 points, and who wouldn't want that, right? So let me give you a little bit different picture of a chart. Again, we'll pull up another chart. We'll go to a 5-minute chart, right? And just the same way as this bounced, right? If you look a couple of days ago, we kept breaking lower, right? And if you bought into the wrong point, it never bounced. It just kept pushing lower lows and lower highs, right, on a day like this. Now, this day, right, we went long several times. We had profitable trades in here, but they were from key locations with tick divergence. And you'll notice the angle of attack, the sharpest angle of attack was right here, and we actually had tick divergence right into this location, okay? And what I'm trying to avoid are days like this where you get this whoosh down. So Friday was 5 points, but this whoosh down is from 23.40 all the way to 23.30, 10 points, right? This whoosh down right here, you think, oh, I've got it, no problem, right? it looks so similar to Friday. Harsh break, right? If you bought this, we rolled all the way from 23.42, the scene of the crime where it broke down, all the way down to 23.30. This is really important in trading. You kind of have to be like a doctor. The first rule is do no harm, right? The second odds is know, really know what does your setup look like, right? So now let's go back to our chart, right, and rethink this. We come into the low. Now I gotta tell you, I took a long at 23.42, and once I realized that I had no tick divergence and I had a tick extreme, I usually expect this to follow through and a vertical dive. So I had a limit order. My white zones are really important. I immediately flattened out the trade, right? And the next area I tried to grab was right up in here, but it broke too hard. I didn't get a second chance. The point behind this is not, if I were just simply selling a service, I would have gone, look how great the zones are, right? Every zone worked here. Support, so I want to trace that so you understand that what I'm trying to do is a little bit different than just sell a product or sell a zone. I'm trying to teach people how to trade this and survive long term. Zone 1 works, support, backside test, resistance, rotation down into 47.45. Remember, these are printed the night before, bounce, comes back, rejects, right? Second time in, consolidates, breaks. First time into the white zone, right? Holds, right? All of these so far are good for 2 points at least, right? This zone does not hold. Okay, this would have been, there's almost no way you could have shorted up into the zone and not lost money. You could have flatted it perhaps, right? Because it spent 25 minutes there. The zone technically did its job, right? We missed this zone, and then on the backside test of this zone again, it holds and pushes back up. Now, if I were just selling zones, right, or selling charts, or just wanted people to subscribe, I'd go, hey, look, my zones work perfectly every time. They work a lot of the time, a very high percentage of the time, right? But my bigger concern is avoiding places where I'm going to get hurt. So, folks, anytime I have an angle of attack that is going to be at a 60-degree angle or greater, right, I'm going to require tick divergence, and I simply never got the tick divergence. And my next setup came over here, right? This is more of a scalping setup, and this bar moved too big to ever give me the entry to the long side. And my next trading opportunity came here on the 50-60 retrace back to the upside, right, in this sequence. So to keep it brief, okay, we have to do a couple of things, and I'm going to refer to Dr. Steenbarger's work here that is very important when you're trying to teach people. Let me see if I can find this here. When you're trying to teach people, number one, accountability, right? I have certain rules that I don't break. 90-degree angle down, more than 60-degree angle, I have to have tick divergence. I didn't get it. Okay, so I had the support area right. I had the stretch that I was looking for, but I didn't have the third piece. No trade, right? Next, psychology in real time. This move was the biggest down move of the day, right? And out of character with the rest of the market. I didn't know if news had come out, if there had been a bomb go off, if there had been a terrorist attack, right? And again, I know how hard it is for traders to make money and hold on to money. So I want as close to a great and perfect setup as I possibly can get. That's where I'm pushing myself to go, right? Not guessing, not gambling, knowing, okay, as much as I can know based on my statistics and my odds, okay? And then the last is adopting a process to focus trade by trade. Okay, so I had the right area, and this is really important. A lot of traders will go in and beat themselves up and go, I should have known to take that trade, right? I should have known to take that trade. Somehow magically you can figure out when the market's only going to go down 5 points versus 10 points versus 15 points, right? But that's impossible to know, and we actually have a methodology for determining whether we want to take risk here or not, and this did not meet the risk. So I have 1 or 2 ways to help myself out emotionally, because the market will not affirm you, right? But your trade process will. My trade process said, get tick divergence. I didn't get a 10-point stretch. Get into a zone, right? Get all 3 of those things, not 1 of 3, 2 of 3, or 3 of 3, right? Now, I can look back at my trade plan and go, I followed my process precisely. Because I followed my process precisely, okay, earlier in the week, when the market rolled up like a beast here, as far as I know, no one in the room lost a penny on this move, right? Not a single person got run over in here, right? On the day where we trended down, right, not a single person lost money. And look, we're making V-shaped moves every day. You've got to keep your emotions under control in this environment. It is so easy to make a misstep in this angle. So I can't get mad that the same rule that kept me out of this trade kept me alive in this trade and kept me alive in this harsh roll to the downside, right? I can't get both. And here's the deal. If you keep getting your high odds setups, guys, you get paid over time. You gain confidence in your own decision-making process, right? You stay accountable to yourself. You can add contracts as you make more money, right? And you can keep a very calm mindset. And as the calmer your mindset goes, when you go, hey, I know I'm not going to take trades that are going to endanger me and cause me to blow up my account, you can start to see other little nuanced things open up to you and really start to make a lot of money. So that's the lesson that we learned from Friday, right? Friday was not a huge day. There's no the zones worked. The zones worked as far as the zones go. I did a great job charting. I'm very good at charting key locations. Okay, I'm fantastic at it. You can have people who can chart all day long and they lose money through the course of the year. And what I'm trying to avoid is what Dr. Steenbarger and almost every other trading psychologist has highlighted. The boom-bust cycle first goes week by week, then it goes in month over month, then it goes to 3-month cycles, 1-year cycles, and 3-year cycles. Can you imagine the devastation of going through a 3-year boom cycle only to give it all back? Well, I can tell you I can, because I've blown up before. I've blown up, and it hurts like you would not believe. To give back a year or more of profits, right, is unbelievably crushing. And I learned my lesson from that, and I will never, ever do that again. I can promise you I will never do that again. I do that by following my rules. Rules like 2 stops back to back and I stop trading, right? My trade plan should have a high enough win rate where that doesn't happen, right? Number 2, I really focus on the small details of change in the market, right? And number 3, I have my setups and I follow the rules of those setups. Now, if they need adjustments to the rules, right, then I go make those adjustments afterwards and I add them to the trade plan, and then I back test and forward test to make sure that the adjustment is correct, right? But what most traders will do, again, I want to reiterate that, they will castigate themselves if they didn't catch this. They should have somehow known, right? But then they also wanted to magically know, how do I know not to short here? How do I know that I shouldn't have gone long here, okay? And the answer is in the small, finite detail that the market offers every day. The clues are there, and if you'll follow a process, you'll stay accountable, and you'll be true to yourself, right? You can increase trade size over time, make the money that you think is there, it really is, right? And be a professional trader and not a hobbyist trader. Anyways, my name is Simon. Anyone is welcome in the room to come in. I love teaching people. I love helping people become better traders. You can email me at tradeandperform@gmail.com. You can send me a Twitter message or on StockTwits, right? Please leave comments if you're watching this on and a like on YouTube. I'd really, really appreciate the like. And at any rate, that's it. I hope everyone has a great weekend. Go make money next week, right? Have a plan. If you don't have a plan, if you're losing money, don't draw down. Stop. Paper trade till you have your process down, right? And then make sure once you go to real money that your paper trade money wasn't fantasy. I can execute without the pressure. Now there's pressure I can't execute, right? All these are little steps to getting you to be a great trader. Have a great weekend, guys. Talk to y'all later.